Let's begin the Euro trade. Good morning, happy Tuesday. The day is starting out a little bit slow again for the London session. So I approach summer months in a particular way because you can have lack of movement, and usually they tend to pick one of the sessions to move it properly, whereas all the rest of the sessions are just very, very quiet. That's what I'm seeing for the London session right now. I've got gold and copper, two things that I will be watching throughout the summer months. Now, let me introduce myself first, just in case we have some new people here. If you're new, if we're meeting for the first time, welcome. My name is Deeyana Angelo, aka Market Stalker D. I have been trading for 18 years. 13 years out of that I've been trading as a prop trader for various prop firms. And I focus on commodities. I'm not that much of an equities trader, although I do trade DAX during London, which we still don't have on Topstep. Again, hoping that at some point we're going to get it. So that is the main product for this session that tends to move most of the time. But even DAX has days and even weeks when the main session becomes New York. Suddenly NYSE tends to have a larger range. Now, today DAX is actually moving quite a bit. I am looking for either 24,130 for shorts, or I might be looking for longs around just kind of in and around 23,948, right? So we'll see whether we can get that at some point. When it comes to gold and copper, I have some levels on gold higher up. One interesting thing is that yesterday we had a gamma wall at 33.70. Today that's actually come down at 33.65. Now, this could be an indication that the market participants are maybe positioning themselves short, because whenever the gamma wall falls down, obviously in a bullish market you would expect that to keep going up. But if I focus on the weekly chart on gold, and not everybody who trades intraday focuses on such large time frames, but I like to look at them for context. And context is that the weekly chart is very range bound. So we need to keep that larger time frame in mind. And even though we could still get some really good moves for the intraday session, the trade locations need to be absolutely spot on, especially during the times when we expect slightly lower liquidity and non-committal moves. It becomes even more important, right? So the way I approach the summer months is to be like super careful to only get involved at levels where I feel we're at the extremes of the intraday range. So that means, or super strong levels where we have a lot of options interest. So one of those is obviously any gamma walls that you can see, put supports, and my quantitative extremes, which is the average daily range high, average daily range low, which could also be looked at a similar measure to the projected implied volatility for the day. And when I focus on that on gold, I can see that the only area for shorts for me would be much closer to this offspring zone. So let's maybe put a little ellipse here. Maybe kind of go like this. Maybe put an actual big screen here as well. How do I move this? Like, I can't. Here we go. Okay. So that is an offspring area that's coming from a slightly older supply, which is also an offspring area, typical range trade, right? So it's like popping into the old zones where sellers appeared, and then also keeps reacting from it. So anytime you hit these swing extremes, it effectively has trouble moving higher. Now, obviously, this is a daily chart, so you can find, you know, a lot of opportunities there. But today in particular, even though we have a demand here, I would not classify this as being at the bottom of any range. So in fact, you can see that the options guys are positioning their put support at 32.50. And that's very far away, very far away. We do have some releases coming up tomorrow and obviously into the end of the week. So I'm not sure that we're going to have enough volume to push it all the way down there. So the only thing that's closer is the ADR high, which is in and around that offspring zone. And that's located at 33.73. We also have a gamma wall at 33.65. So literally that entire zone of those 7 points or so becomes my area of interest. So yeah, that's the gold plan. If it starts to fall away before then, I probably won't be involved until very, very late in the day. And when I say late in the day, I do mean closer to the euro close. And in fact, on the accounts that matter during the summertime, I will only aim for that same time of day. I will aim for something I call the post-NY cut. But usually that means waiting all the way into the euro close for that high probability or highest probability trade to come. So whatever is around that time of day, I will formulate my hypotheses at that point. But yeah, I do have a little euro trade combine always just to, you know, put in a trade just in case we see something. But right now I can't see anything that's that great quality. When I analyze copper in a similar way, let's do the same thing. So looking at the weekly chart. Again, no notable trend. Some signs that we have some buyers stepping in a little bit, but the problem is that we opened inside London value. That means we're in balance from wherever we were yesterday. Again, summer doldrums and slowness of everything. There are a couple of strong levels in and around these prices. Daily chart kind of consolidating. That could mean maybe some shorts, but only if we manage to break the gamma wall, which is now sitting at 485. And yesterday it was at 484. So that, again, introduces a little bit of a contextual clash with what I'm seeing in pure price action, because they're range bound, they're sideways movement, and yet the options activity is telling me that they moved on the gamma wall slightly higher. And then to make that even more blurry, the put support is also growing. I would, just looking at the composition of that daily chart, again, I would be maybe more short biased, but there is a problem with copper demand. Sorry, with copper, yeah. So the demand for copper is pretty strong if we look at macro data. And again, if I'm going to position myself in that regard, maybe I want to shoot for something like the ADR low, and in copper that's currently located at 479.40. So maybe we can put the markers for that. And then ADR high all the way up at 495.85. I did warn yesterday that equities are probably going to be pretty quiet. It's exactly what happened. So we had a whole bunch of unhappy chat people that I was when I was watching the main broadcast. So yeah, don't rush. Summer month, like if you can survive summer months, that would mean that your skills have grown quite a bit, right? That means you're not rushing, you're being pretty selective with the types of trades you're going to take. But overall, summer trading is just like snail paced on most days. And then maybe you get a release that puts a little bit of juice, pep in the step. And then it just dies out again. So, you know, don't rush. It's always a bit difficult. Deeyana wants to know where can I get all these options levels. So I use MentorQ. They are a company that aggregates all the very difficult data that, you know, is kind of hard to sift through if you've never done options. I used to look at the matrix myself and then just figure out based on pure numbers where the interest lies. And that was, they used to take me usually like an hour, maybe 2 hours if I was doing multiple products. But MentorQ literally aggregates that data down to a line on the chart. Now, what happens at the line? It's like any other level, but this one has the market maker power behind them, right? So the gamma walls can bring a halt to any kind of a stop, to any kind of a price moving further. If it moves, like here's the rule that I have. If we get to one of these important levels, I'm going to use gold for this purpose because I think this one is a little bit sketchy because it's got two of them at a very similar price. But if I focus on gold, and if I say, let's go down to a 30-minute chart. If I say, well, my idea is that once we get to 33.65, but also somewhere in the vicinity of 33.73, if we get through the gamma wall immediately, so on the first try, let's say you're looking at a 10-minute chart or 15-minute chart, and it just goes all the way through it, usually that means that there has been an intraday shift with the gamma wall. They either took off the positions, you know, they closed them out, and then you just don't have the same interest. But as long as that stays intraday, you will see the price activity struggling. We had something like that in ES last night. We actually had an ES gamma wall at 60.25. So was it 60.25? Yeah, so here it is. So 60.25. So this is what we were working with. Imagine not, let me just get rid of this one. This is what we had coming into power hour, right? So this was the core resistance gamma wall. Now we had another one, if you looked at SPX and then converted that options activity into ES, there was another one at 60.45, but this one was just like an outright ES options activity. And look at how it got there. So even if I go down to something like a 15-minute chart, this is what you want to see if the gamma wall is going to stay. So they're going to come up to it, and on the first try, they sell off. You get a selling wick. And then the same thing happens on the subsequent candles. It wasn't until like the MOC power hour sort of time when we saw a committed, it started half an hour before power hour kicked in, but it was kind of non-committal, right? So we had a good move away. I actually did try running a short on YM, but then I did not want to keep that through this candle. I did not like the fact that they made another attempt at pushing higher. And YM and ES can be correlated a lot on a lot of the days, and I will pop in a trade at the end of the day in one of the equities. And these days that seems to be YM for some reason. I just prefer the price action in there. It's kind of quick, but it's not as it's as seizure inducing as NQ. So it speaks to me for my slightly aging brain and some of my let's say calmness, that I can maintain mental composure and calmness in a position. But obviously because we went quite high, this would have challenged everybody. I think YM looked a little different, if I can remember. Just go back. Yeah, it looked a little different because it was weaker. So same time of day. Let's go back. This is what it looked like. And I think I was getting involved around these candles. So I managed to get a decent entry and then didn't like the fact that it tested it. But by then I would have done my like I've already done like 5 trades by then, and I was like, you know what, I'll just call it a day, because if this goes wrong, then I'm gonna put a much bigger hole into my, and I was only down like 190 for the entire day, so I did a lot of trading, couldn't really get anything worth it. And if I had let this go to the full stop, obviously we don't want that. Then that would have been, a loss of like 500 instead of like just basically a break-even day. So because of that, I decided not to run it. But the idea was actually pretty solid. So it didn't take, it took time actually to get there. And I wasn't going to sit in a trade that was not doing anything for such a long time for that time of day. Because during power hour, I actually wanted to move pretty quickly, but again, summer doldrums, you get this non-committal nature, and then they finally sort of made a move into the MOC, and that was it. So difficult trade for sure, but the idea was correct, and the gamma wall held. So I use for YM, because there's not much option activity. They don't do it very often. I will use converted ES levels. Now, I know the Mentor Q has blind spots, but I find that the ES converted levels work better for me for this particular purpose. So, take that as you will. But I will watch. So here's what I've got on another time frame, on another chart. So this is what it looks like. I usually have DAX, ES, YM, NASDAQ. So I have all of them all on the same tab, and then I just track how they all behave between themselves. That allows me to get a better pulse on the market. That approach probably isn't good for a beginner, because remember, I've been doing this for a very long time, and I'm very aware of the correlations between different asset classes, and I do something similar for the metals. So I have all of the metals just similar how you saw the equities. So it can tell me better which one I should be on, and which one is weaker, which one is stronger, and ultimately the gamma wall did its thing. But if it's not going to work, like if the gamma wall is going to give way, usually this first run up to it just goes up through it, and usually usually ends the candle with a Maribozu or something. That's basically a candle with either no wicks or very little wick. So it's a very decisive move through it. And in that case, especially if we move far through the gamma wall, I will then look for a test of the gamma wall for maybe further upside. So at that point, the context of what should happen at the options level changes. And for me, it becomes almost like a new support that's very close by. And in my eyes, it also offers a kind of a low risk continuation trade, if that makes sense. It's similar, like when you look at the initial balance in the market profile concepts, when you break the initial balance and you get that very strong close of this 30-minute TPO, and then you can look to the initial balance high as a new starting point for further upside. Exactly the same concept, just using options levels rather than the auction theory levels. And, you know, for beginners, it might go over your head because you want something simpler. You know, you don't want all the fancy stuff. You just want to start getting, you know, your feet wet and stuff. But ultimately, I do like my fancy contextual tools and timing tools and all of that. But I didn't just kind of jump into trading and suddenly I was using all of this. No, it was like a slow progression. 5 years of just supply and demand, just looking at market structure, just kind of learning about the accumulation, distribution, move away, strong move away, gradual move away, risk reward on the trade, profit margin on the actual level, all of that for 5 full years. Only then I started to go into, okay, let's have a look at volume profile. Then let's learn TPO profile and market profile. I learned about the volume profile initially at the apprenticeship, and then I met Hogue through Topstep 2015. So we've known each other for a very long time, and we've been friends for a very, very long time. So he was my mentor at that time. They were running this thing called the Market Profile Lab. I was already using parts of it, but I didn't get into the nitty-gritty of the profile. And he was the one that he was the person who advanced my knowledge and application of profile far deeper than anybody else. But then I moved that on because I was trading commodities. I found that some concepts were not exactly working the same way because profile was mainly tested on ES because Jim Dalton was mainly an ES trader. And, you know, obviously some of my markets did not have an upward bias. Some of my markets were very double-sided rather than ES that was largely single-sided on most days. And I needed to evolve those concepts to suit my needs. And this is where my market stalkers method came from. Because suddenly I was doing these trades at, you know, particular times of day that were extremely profitable almost every single day. So naturally people around me who were working with me in prop offices, they were like, how did you see that trade? And that's actually how my coaching began. I didn't have some sort of a big calculated idea that I was going to go into coaching. It was just like, oh, at one point suddenly I have 12 people around my screen and I'm explaining the setup. And then after hours, people would be like, hey, Dee, I just wanted to reach out, you know. And back then it was Skype, like very long time ago. So I would be like, yeah, let me help you out. So this is what I was seeing. And then I would get another person, like I'm about to go to dinner with my then boyfriend, now husband, and we would be at a restaurant and I would be, you know, kind of on Skype and just trying to answer people. So it started to encroach on my private time. And just to get a little bit more freedom from that, I decided that if I was going to do any sort of a trade and then I was going to put it in a video and just explain it, and whenever a colleague asked me, I could just point them to the video. Eventually I uploaded that in and around 2015. I think it was like September. I still had this like big purple hair. I uploaded it on YouTube, and suddenly, literally within a week, I had like 30,000 people that watched it. I don't know where they came from or how or why. And then I started getting wallpapered. Where do you learn this? Do you have a book? Do you have a course? Do you have this? Do you have that? And I was like, I have nothing. And they were like, but how do we learn this? Like, we want to learn this supply and demand thing. And, you know, this is really good. It's, you know, very new, and you're matching auction theory with this. Like, we've never seen that. So I was like, okay. So that was my segue into coaching. Didn't come, you know, I kind of fell into it, I suppose. And then I really liked it because when you get people who start having results as a result of something that you tweaked for them, suddenly they're like, Dee, I've got something to tell you. It's like I've spent the last 3 months in profit, and I didn't have big, you know, disaster moments. And I was like, wow, really? I was like, that's amazing. I'm so happy for you. So I like the fact that apart from the money that we can make, you can also give back. You know, you can give back to the community just by sharing your knowledge. And, you know, Topstep with the VIP coaching aligns with that goal of mine in life. And this is one of the big reasons why I still stay with my Topstep family even after all this time. I was a part of Squawk Radio back then. I wasn't like a contract or anything, but I was kind of a guest. Just kept popping up. I was their funded trader and stuff. So now we've got TopstepTV, and now we're 10 years down the line, and it's evolved into something truly, truly beautiful. So thank you all for being here to be a part of our community and share that journey with us. Sonny says, where's the put support in comparison with yesterday's GC? Yesterday's put support in GC was, let me just see if this is HD or, yeah, okay. It was 33.30. So it was here. This is still Asia. 33.30. We narrowly missed that. Narrowly missed it. I had an alert for this thing to cross over 33.31, but the alert never kicked off. And what I do when it is the summertime, I don't sit here and kind of just watch it and I go, is it gonna get there? I basically just put alerts, and I have TradingView on my phone, so that kind of just sends an alert to my phone when my level is reached, and then I get into my office here, right? So that's something that's worked really well for me in my career, especially during the quieter months. So summertime, prime time to do that. And once the level is there, or once I'm within like sort of a couple of points from that level, I like to sit down and watch what happens. Now, my brain works in the way where if we don't touch exactly the level that I want, I'm not chasing. I want the level to, at the very least, get a touch and then either bleed through it or reverse. It's not in my interest to just go, well, this is good enough, because I can't do that. If I was an algorithm and if I said, based on the options levels, if price is equal or lower to 33.30 and 30-minute time frame is higher than 33.30, meaning that you had a price action activity that brought the price away from that level, then go long. That's basically how you explain things to a machine. You effectively have this thing called the conditional logic, but that first step, you can't just say, oh, if it's ballpark in like 33.30, above it, below it, like it doesn't really matter, just look for a trade. That's something that we can do as humans, but over the years I found myself much more comfortable to wait for the touch, to basically be like the machine, to just have that binary thinking process. We don't touch the level, nothing to see here. And I don't care what it does, if it doesn't touch the level, because the first condition hasn't even been filled. And then you kind of move that line from, I didn't touch it, but it still kind of worked, to you broke one rule. And then you go, well, it kind of didn't exactly reverse properly, and it didn't have a good reversal, but I'm going to go in anyway. Where does it end? You're suddenly on a slippery slope of breaking all of your rules and sometimes having a positive consequence from it, like actually ending up in profit. You're teaching your brain that it's okay not to follow rules because you have a positive outcome from it. So whenever I get a day when something like this happens, unlike most of you, I will not be pining for the fact that I missed out. I didn't miss out on anything. It didn't touch my level. I did not have 3331.7 as my level. I had 3330, right? No touch, no trade. Binary thinking process. So alerts help with that, obviously. And at this point, I could not be bothered at all. If the price moves away, million ticks if I didn't have a level and if it wasn't in my plan. Maybe I'm weird like that. I don't know. Hey D, any headline behind why NQ rocketed then sold off? I don't trade Asia very often. Trade it sometimes. So having basically I have not looked at financial juice yet. Okay. I got up about 40 minutes before I started this stream, and I did not focus on NQ or anything else. So I'm looking at GC. They kind of had a typical power hour for Tokyo that went crazy as well. But NQ, not on my list of looking at why it went up or down. On a 4-hour chart, this looks terrible. It looks like a distribution to me, but hey ho. And I mean, skyrocketed? You think this is a skyrocket? To me, this looks like a bog standard move, man. It's not even it's not even that big. Like NQ moves, let me just make sure I get that right. On average, in a day, it moves 375 ticks. And during Asia, it typically moves 93 ticks. What was the size of this move? I'm going to tell you in a second. The size of this move was a little over that, so 142 points. But I would still argue that, you know, a overshoot of 165%, so 65% overshoot, that's not too big of an outlier. So to me, it would be just like a little bit of a pump, but skyrocketed, and then fell off the cliff. I don't think so. I mean, what time frame are you on, man? You want a 2-minute or something? 1-minute chart? That would probably look quite effing scary. But, you know, get off the 2-minute chart, maybe. Because to me, this is just like a not too much of a big outlier move for Tokyo. We know that NQ can move for Tokyo, especially if there was like some sort of a, you know, anything about these talks that Trump is apparently doing, or he's not doing it, it's his team. Yeah, anything can bring a little bit of a pump, but is this you know, skyrocketed? Like, yeah, on a 2-minute chart it looks horrendous. On a 30-minute chart it looks like, you know, 4-candle move, and then a typical Tokyo, runs it up, reverses it, smash back into London. This is a normal pattern. I don't see anything odd there. Like, what I'm actually very interesting, Pi. What is your, like, look, if it had run for like 500 points, like, you know, 1,000 ticks, or even like 800, 900 ticks, and then smash down, I would be like, yeah, I don't know, let's have a look at some headline risk. This looks just like it's just normal, I don't know. Oh yeah, okay, so here we go. This is where the non-systematic approach is playing games with your mind. Pi says, I guess it ranged so much lately, so any decent move looks big. Yeah, I mean, you know, but you guys were complaining, not you in particular, but the main chat was complaining when NQ had a 300-point range the other day. Like, I think it was like 2 weeks ago or something. They were like, oh, it's day of shit. And I was like, dude, it moved like, you know, 700-800 1,000 ticks, and you know, you're like, oh, it's a quiet day. So we need to have more robust ways of figuring out what is an outlier day proper and what is just, you know, a move that is normal, but because of the previous activity painting your perception, now this move looks big. This is also why I like to focus on larger time frames, because it gives you context. Whilst on a 2 and 5 minute chart, that move looked like it was a skyrocket. This is what it looks like on a 4-hour chart. Like, I don't know, but to me, a rocket, this was more of a rocket. This is a pretty big move. And a smash. This is a pretty big move. But, you know, this looks totally within the statistical probabilities and nothing scary there, right? Just regular intraday whipsaws that we get pretty frequently. So go up a time frame. That's what I would do. You know, maybe find some, do you use like ATR at all? Because I use ADR as a level, but with the ATR, you can easily just put it, you can easily just put it, I don't know whether you can see the bottom of my screen, you probably can't, so let me just do this. You can easily put ATR. I like to use 9 periods, but over here I'm using 14 because some of my colleagues use 14. And just look at this number, right? Look at the number in a 5 minute. Have some sort of a systematic way of figuring out whether, and maybe track that in your weekly plans, not daily plans, but weekly, you know, and just go, well, we are looking at an ATR of 42 points. Last week it was, you know, 30 points, so now we have an expansion or contraction. Or if we go from 42, we go up to like 120 points, you're like, whoa, okay, this is a massive expansion of volatility. And you have a measure that will tell you that, rather than just going, wow, this was a skyrocket move, and it's actually not. So, you know, let's try and be a little more systematic with definitions, because the range-bound market can really seduce you into thinking, all right, this is the new norm. We're just moving in a, you know, let's say ES, moving in a 75-point range. And then we get a day that's actually a normal day if you look at the ADR over the last sort of 2 weeks or so. And you go, oh, actually, no, that was the projected range all along. We just ran into a bit of a quieter time. So yeah, be very careful with that, because it can really, really seduce you into thinking that we suddenly have some newsy moves happening, and yet we don't. I mean, I'll look at financial juice. I will have a look for you. I will need to grab another tab here. I had shut down my computer overnight to do some maintenance and stuff, so let's see. Anything that we have here? Actually, let's just grab one of these so I don't confuse anyone. A lot of ECB stuff happening today, so I would expect DAX to be moving. But again, I like to trade DAX from my 11 o'clock, which is going to be in about 40-50 minutes. UK unemployment. Yeah, I mean, Asia stocks waver as US-China trade talks enter second day with cautious optimism. Asia market wrap link over here. Asia shares paired gains in the morning and equity index futures flipped ahead of the second day of talks between US and China. Yeah, I mean, it's nothing, yeah, nothing burger like Hogue would say. So yeah. Do you use Jamal? What's Jamal? Did I miss something? What is Jamal? Do I like market orders or limit orders? Market orders. I like to have more control over when I'm going to enter. The problem with limit orders is that if you have a limit order and it doesn't kick off, for whatever reason, it could be, lack of, because here's the thing, limit orders will guarantee the price, but you're not guaranteed a fill. Whereas market order, as long as you're working with products that don't have like a massive spread to them. Let me change this to HG. Then you shouldn't really have many issues. What's going on? Yes, okay. Yeah, then you shouldn't have too many issues with market orders unless you're trading, 100 lots, 120 lots, and then you will start having, like, anytime you see, like, for example, we have usually about whatever this is, 5, 10, 14, 16. So there's like ballpark, let's say there's, I don't know, about 100 contracts here, and that's your liquidity. So in order for you to execute a random long trade, you would need to find counterparties or a counterpart of 100 units available to the other side, and then you would eat them up. But it doesn't happen instantaneously in the live markets. It happens by getting 5 here because there's 5 there, then maybe grabbing another 4, 5, or 6 in this place. Like, it's quite difficult in these types of markets, especially this time of day, to trade with any sort of size without serious repercussions to your execution and a lot of pain or partial fails. That's why, if you were trading with size in a live market in commodities, it's a very different game. So it's not like sim where you're like, oh, I'll just whack in like 20 lots on like, 20 different accounts and it all fills instantaneously with no slippage, with no problem. That's where people who get moved to live find out very quickly. They're like, oh, okay, is the Topstep platform? And I'm like, it's not the platform. hate to break it to you. But yeah, inexperienced in live environment and try to trade with any sort of size. Not so much like ES and NQ. They tend to have decent liquidity, and you can see 100 prices as well. So you can see maybe which prices have more, and then you can sort of front run that to affect it. Like, for example, on gold right now, we have these 74 contracts here. And if I was, doing the live thing, I could enter, a bigger position to basically grab the 350, and that would be my scalp. So effectively getting ahead of the big orders, because those usually do get tested. And there's like 90% chance that will get tested. And in fact, if you're doing any sort of scalping, that would be a useful way of looking at things if you just want to grab a few points. But at the same time, whenever I'm doing that, I do want to make sure that my initial entry was in line with the market structure on a slightly bigger time frame. So instead of grabbing 5 ticks, maybe I want to position myself somewhere nearer the initial balance high, so 33.54, for example, and then fish for the 33.50 as my target. ergo banking 40-50 ticks. I don't like doing that a lot because it's very mentally exhausting, and these sort of imbalances where you suddenly get a bigger order, they have to be pretty sizable. It can't be this 22, so the 22 means nothing. It's too small. I look for the imbalance on the dome to be at least 5 times bigger than anything that we have in and around here. So really, that 75 at 3,350 is the only order that makes sense here for a short, if you're going to hunt it. And somebody will be like, we got 25 here. Not big enough. Not big enough. Because we have 10, 12, 11 all around it. So you need to see, I call them like very scientifically, sticky outy prices. The sticky outy price. That's what you want to see. So big imbalance of, you know, a larger player that just decided to step in. So we got nothing on copper. Crude oil has those numbers that are bigger. So we got 100 up and down. So for crude oil, really nothing less than about 110, 150, 70 not good enough. And right now we don't have that. We literally don't have any of that ilk. So yeah, let's get back to GC here. Okay, let's see. So what does Jamal mean? Do I use Jamal as a I still don't know what that means, Joe. So I don't know. Maybe I missed something. Can you look at platinum? Maria asks. Yeah, I can look at platinum. Let me just find it, and we can look at it. It was somewhere here. By the way, I managed to bite my tongue yesterday, so if I'm talking a bit weird, that's why. Zero float. When do you consider DAX start for the initial balance? London time. Eurex is a small exchange. It's, you know, the largest European exchange. But compared to the former larger European exchange, which was London before Brexit, their volume is not that relevant. So whatever, I actually have a setup on DAX that occurs every so often that's called the Frankie Fake Out, where Frankfurt, which is where Eurex is located, sort of goes one way, and it looks like it's breaking out. And you're like, yes, we're going over the Tokyo high. And then London comes in and they just smack it down. The amount of times people get caught in that is epic. So London, for me, is the start of the true initial balance for DAX. Platinum, here it is. Okay. Let's use copper chart because I'm still waiting for my levels in copper. Platinum. We're going to do the same analysis. Okay, we're breaking out. Yeah, it's definitely broken out. Let's make it bigger. Let's use this one. Let's go back to a monthly chart actually. See what the hell we've got there. Since it's such a strong breakout. Let's see where it's popping into historically. And I'm also going to delete all of these. Is there a quicker way to delete all drawing? Is the real question. Because I found myself, you know, after I've not traded something for a long time, and then I kind of go back to it and then add more levels onto it in different price points. And then I look at the monthly and I'm like, oh, it's very ugly. Okay, coming into a monthly supply at 1240, let's say. See, you can have aha moments on these massive time frames. We already had, like, this was years ago, it's like 3 years ago, March 2022. We had a test of this supply, so that's one test, but also a very good move away. Once we get back up here, it's kind of do or die moment. It could just continue to have that top in place of 1240 being the conterminous line, which is like the proximal line of the supply that we're working with. But I wouldn't be surprised to at least see some sort of a reaction, even however temporary, you know, before we maybe move higher. I haven't looked at what's going on with platinum fundamentally. Is it just following gold, or is there an issue with platinum exports or something, or imports? I don't know. So I would have to look a little deeper into it just to get a bit of macro context behind it. But yeah, that was this was painful. Christ, whoever traded in this, that must have been disgusting. So unless you were looking at the monthly, that was a long time of no movement. But it's a monthly chart, so you know. Let's have a look at weekly. Now we get the monthly context. Still sitting in that wick from that March 2022. Yeah, this is definitely more of a decision zone. Daily chart. Have to go way back when. And then I'm going to see what that supply on the daily chart looks like. The one that popped into the monthly supply. Was it clean? How do we move away from it? I mean, it was pretty bloody clean. I can see it. Classic touch of the conterminous line, bearish engulfing, follow through. Can't get more perfect than that, right? So if you were looking at the monthly time frame as a potential, and I bet you know that there were some options there at like whatever this price was back then, because this is all just pricing is adjusted for the forward contract in the futures. So when you look at the continuous chart, you know, this may have not been 1240 at that time. It might have been a different price, but I bet you that there was some options levels there and a gamma wall, because that's what that looks like. It was very clean. So yeah. Okay, so now that we know what we're working with here, I'm going to go back to the current time frame and find the nearest low, because we don't have a high yet. So we have a couple. We have this one. These are some initial balances that are marked off over the years. Well, not years, but you know, this year. I think I traded platinum a couple times in May. Not very often. What is another low? This is an obvious low. This one, not so much. I would call this more a reaccumulation before we went up. Why? Because it never had a meaningful swing away from the level. It was just like pop, yeah, let's go up. That's reaccumulation. It always looks a little messier. But this one had a nice little squiggle down, so a nice little wave down, establishes a new high, goes higher. What happens here is now the question. But those are your relevant zones from like big time frame. Let's drop down to the 4-hour chart. I don't think I'm going to find any trades today for London, so let's use this as an educational moment. 4-hour chart, super bullish. In fact, out of everything that I've seen, this was super bullish. And every time you have an outlier where we just keep going up, up, and up, and up, and up, I like to use the 9 EMA as a little nudge of whether we're still shooting higher or whether we're breaking down. Why? Because it's pretty quick and it tracks the price nicely. When it flattens out, and for that, I do use a combination of 4-hour and 30-minute chart. When it flattens out and then closes a Mariposa candle underneath it, I will look for evidence on the tape to see continued selling at that point, and also an options level if there is one, and ideally you want to have one. to position yourself. So it's all like step 1, 2, 3, 4. Is there a trade? Yes or no? Binary decisions. Right now, we're touching 9 EMA, but we're not breaking through it. So the next 4-hour time frame should finish in about 2 hours, I think. Yeah, around my midday. I don't know when they start these candles. Actually, they might start at weird times. Yeah, it's one of those that starts the 4-hour candle at 7 a.m. So that means it's going to be ending in another half an hour. If this is still above the 9 EMA in half an hour, I would deem that they're still pushing towards at least 1240. And this is the point where you want to start matching the intraday levels with whatever we've got here at the moment. So, options levels. Anything super strong? No, we have some GEX levels around here, but the actual call resistance in a gamma wall, which was a call resistance back in the day, or yesterday, which is like ages in intraday trading, right? What happened tomorrow? It was like, what? So gamma wall is actually at 1150. 1150. Guess what? That falls into this demand that I took from the daily chart. Funny how that works. Where's my... Oh, there it is. Okay. Just going to grab my Bartek indicators. Today, we open inside value for London. COMEX value is... So value low 1210. Let's drop down to the 30-minute chart so I can map this out for you. Then you guys can have that on your charts. Since I'm here, since I'm not actively trading, might as well give you me levels. So what did I say? 1210. If we want to nitpick, it's 1210.3. And that is COMEX value. Because what use is it that I give you the London value when that's not going to be valid as soon as we open? But COMEX value, yes. Value high, 1224. And I will explain how you can use this. If COMEX starts in between these two lines, that is considered the market imbalance, which means that yes, you might get a push outside of it, but like 7 times out of 10, when that happens, they will push back out. You got to match context with it. We're still not up at 1240. So if they try and push lower, and then they take out... So what is this? This was yesterday. This was Asia low. No, this is London low. So that will be overnight low. So if they smash through the London low, and then you see they pull back into the range above that, I would argue that that's a responsive long. And in that case, I would be running a rotational trade through this value, or at least through the initial balance that you have at the time, which we don't have yet. But if we open outside of these two levels, and contrary to popular belief, it is not to do with like, oh, if we open below value, that's bullish, and if we open, because it's like, oh, prices are at a discount. Not quite, okay? Not quite. If we open super near value, but below it, that's actually bearish, because we have effectively moved away slightly from the previous day's balance, but not far enough away to warrant a discount in prices. A discount in price is when we move anything over 0.5% from the open, okay? And, you know, if at the open, the distance from the outer edge of value and the current price, that wherever the COMEX opens, is over 0.5%, but up to about 1%, which will vary from product to product, but generally, these are the numbers, then that's at a discount. And then you might be able to find a mean reversion back to value. If we're close to value, but opening outside of it, that is actually with the direction of whatever they're trying to do. So slightly outside, bullish or bearish in the direction of the open, up to 1% distance, but no less than 0.5. That's the discount or premium if you're opening above it. So that's the kind of open sentiment that I like to look at. Okay. And again, with the numbers that I've just given you, that's a part of my method. I go one step further to go, well, this product has to have, 0.8% distance from value in order for it to make it a valid mean reversion trade and things like that. So it's really detailed, and I'm, very data oriented, but that's how I use my value areas. However, because it changes depending on whether you're in balance or outside of balance, I will do different hypos. So like I said, if we open inside this little zone, then the fishing for the liquidity below the most recent relevant low, which in this case would be London, so London low. They smash through it, come back into range. You have to wait for that. That's a responsive long. If they open below it and then they have a sustained auction, they start the initial balance immediately dropping away, you can argue that that is already a case to just jump in and ride it all the way down. But I would like to see that closer to 1240 area, maybe even higher, before we start to reverse. Oops, just move that. Does that make sense? Does that help? Why is the dome so small? And why aren't you seeing orders outside like 10 ticks up and down? Because my products are commodities products and they are not highly speculative for the most part. Only a few products have 100 up and 100 down, which is given from the CME. It has nothing to do with Topstep. So most of my products will only have 10 prices up, 10 prices down, not 100. But because we have these new things, there's the new twist on the order flow and level 2 data. What do they call it now? They're trying to sell it to retail traders as like the new thing, best thing since sliced bread. And people keep asking me about it. MBO or something, I don't know. It's somewhere along those lines. I can't remember the name of it. But I looked into it and I was like, really? It's like people can't get their heads around the normal level 2 data, let alone, the order book that goes even deeper into the view. It's like, and you're selling this to retail traders as what? As what? Like the new Holy Grail? Like I just don't really. And it's always dodgier brokers, of course, that are on the case. It's never usually like futures brokers. It's like, oh, the CFD broker, now you can look into this. It's like we've been able to look into things in futures since the beginning of time. Thank you. I get so skeptical whenever we have the new shiny thing. I'm totally with MP on that. And not just in prop, but also in like the new tools. It's like people can barely, like I said, get around the price action and stuff. And they're like, have more complex data that you cannot figure out at all. Why? Because you want to get rich. This will do it. And you're like, it's just going to confuse the hell out of them. Yeah, that's what we want. But it's CFD forex brokerages. I've stayed away from those for a very long time now. We're coming up to, I think the last time I put in like a serious forex trade was like 2018, maybe. But even then, I already didn't have like a serious account size in forex brokerage. It's like, no thanks. Right, let me catch up on the questions. I did that. Yeah, Bruno doesn't even know what Jamal is. We're very confused, Joe. What is Jamal? Was that a typo? Like I'm trying to like figure it out because it's really irking me. I'm like, do you use Jamal for profit targets? And I was like, what? Okay, it's Bird Dog is asking, how long does it typically take one to become a full-time trader? Unpopular opinion. Don't be a full-time trader because you don't need to. That's not the goal. Even those of us who derive a vast portion of our income through trading, I would not, like when you say full-time, it's like, yeah, I work from like 9 to 9 because I like to stare at the markets all day long because I'm addicted to them. I would say that trading should always be cherry on the cake, right? No matter what you do, no matter what you do. And you can have trading related businesses, but please make sure you sort out your cash flow first. And don't think that you can rely on it just trading, especially if you've not had at least 5 years of solid profitability where you've gone through the highs, gone through the lows, you've done the whole, and if you are thinking of leaving your job and only doing trading for a living, make sure you have at least 2 or 3 years worth of savings. Because if things don't go well, if you run into something like Trump volatility or super quiet markets as a result of whatever hits us next, right? Because that's how it has been. Like it used to be every 9 years we used to have a recession. And now it's like every 5 years we seem to have a black swan event. Go figure. So that's getting to a point where unless you have 5 years of looking at various market states and you've navigated through them successfully, please do not quit your jobs. In fact, trading, you don't need to sit there. Like the beauty of trading is that you can get your business done in 2 hours and then F off and go do other things, right? You don't need to sit there and go, I'm a full-time trader. That's not a flex. That's not a flex. The flex is, yes, I work a couple of hours a day. I can, make extra cash. Sometimes it's a lot. Sometimes it's a windfall. Sometimes it's nothing. But the bills are paid and the cash flow is still fine. You're not going to be like, oh my God, where's my mortgage going to come from? How am I going to pay for my kids' college fund? And, you want to make sure whatever drastic change you make in your life as a trader that you have cash flow sorted, that bills for the 2 years are completely covered. If you don't have that, don't quit your day job. Please use it as a tool. And here's the thing: there's a American Chinese comedian who he was actually the one from Silicon Valley. The dude that plays the little Chinese tenant that's like really nasty to the guy. They're like nasty to each other. He won't move out. He finds like ways to kind of stay there. Well, he's actually a really funny guy. He does stand-up comedy, and he was saying that his dad, who initially wasn't that happy that the guy went into acting, because he was like, Dad, I want to follow my dreams. And the dad goes, no, not follow your dreams. It's not good homeless. It's like, you work and then you can follow your dreams on the side. Totally true, right? And then his dad also went on to say, oh, this acting thing is easy. He actually went for some audition for like a Hong Kong show and he got it. And he's like a huge acting star. Like very, very famous because he got into some soap opera in Hong Kong. And he was like, I don't know why you think that acting difficult. Acting's super easy. It's like, what are you talking about? So yeah, you should check him out. But he kind of tells some big life truths through comedy. And I quite like the way some portions of like populations look at different ways of doing income. And I don't know why, but us on like the Western side, we're obsessed with this idea of making our cash with one source of income. It's like, oh yeah, I became very wealthy just doing this or just doing that. The big reality is that everybody who made it in the world, along the way they had different ventures. Even the people who are just like, oh, I'm an investor and that's all I did, they invested in companies They initially had a business that had like multiple shops that they brought back from nothing, right? There was like one shop, then there was two, there was three, then there was seven, then there was a mini empire. Then they went into investing and maybe venture capital and stuff like that. There's always a story, you know. I'm always skeptical whenever somebody's like, yeah, I just did this one thing and I did really well. It's like, that's great, but that's like winning the lottery. You are one in literally like a million people. So trading, I would say that the numbers that are thrown at us, that 97% trades fail, I would actually argue that that's not the same demographic, because those of us who are here, all of you here, you are working hard on your skills. You're not just sitting there clicking a few buttons. You are watching Topstep TV. You are trying to get into the VIP. You've probably paid for mentorships. You are working hard at this. You are not the same as your average Joe down the road who's like, yeah, I just popped in some money into Bitcoin and it didn't work out very well. You know, they did not seek out strategies. So I would say that the success rate for those of us who are super dedicated, we journal, we are fishing for our weaknesses, we are going through Neuro Wednesdays with Jerome, we are seeing how we can make things better, get more knowledge, more experience. I would say that the success rate for us puts us probably in, like, just purely from the numbers that I've seen in my coaching, I would probably put it at sort of like, okay, I'm very selective with the type of people I take on. So there is that additional filter. But let's say without that filter, I would say the chances of making it as a trader is more like 50-50. Now, there is a company that kind of tries to do mini hedge funds through their platform. And those of you who know, who have been in Forex and stuff, you will know who I'm talking about. I'm not going to mention them here, but basically they have this idea that any trader can scale with them. I have a bit of the reason why I don't want to say anything and don't want to mention them is because I do have a little bit of a problem with the way they're doing things, because they're kind of running it as almost like a 220 hedge fund sort of thing. And like you need to have an inordinate amount of capital invested in your thing in order to make it work, because they will only pay you out 20%, and it's like yeah, thanks. But they do have their numbers, which actually states that out of all of their traders, that only 69% are not profitable. So that's even with, you know, a pretty big pool of people who are like, oh yeah, let's try and do this, they still have nearly 70% of people who are failing, but then you have the other 30% that are doing pretty well and they are profitable. So now that when we kind of compare that to any other business, how many new businesses fail? 1 in 5, right? Sorry, 1 in 5. 1 in 5 businesses will succeed. So we're kind of getting to similar sort of numbers, right? It's like any other business. So now I actually got an email from somebody who said something along the lines of, I don't feel like I'm just throwing sort of spaghetti at the wall and hoping something sticks. So yeah, that was a very funny comment. But yeah, trading with enough effort, knowledge, and experience, yes, it can be beautiful, but it's going to take time. And yes, it has a higher failure rate, but not nearly as high as people think. So how many years until you become a full-time trader? I would argue never, because why would you be a full-time trader? And I can tell you that from the point of view of somebody who did that. I did that. It was the worst decision I ever made, man. I went from being super confident, super, you know, controlled, emotional. Like, this was a long time ago. This was many, many moons ago. I'm like, I'm going to stop being a musician, because obviously I was a successful musician before this. And then I was like, I'm only going to do trading. And my husband was like, yeah, let's just do trading. He quit his job. You know, he was like, yes, let's do it. Oh my God. That year, the first month when I started struggling a bit, and it wasn't like, oh yeah, I totally messed it up. I was making, so here's how it went. So the first month, it was like 20K a week, 10K a week, 20K a week, 10K. You know, we had a big, obviously big pot, but you know, we're like, I'm going to go full time. I'm just going to trade my own money. And then by about month 3, something happened to me. I don't know what, but I got this little thing in my belly where when I lost a trade that was of significant size, it was like, I think it was like a $5,000 losing trade. $5,000. It was in gold. And I was like, oh, okay. That didn't work. Ouch. Then I started looking at my P&L. Then I started thinking, so if I have a bad week, I'm then going to have to make this much to make up for that and for this and for that. And that just put me on a path of no return, effectively. I was just like going into my own tunnel vision of, well, oh my God, what am I going to do if this continues? So the reason why I know how to deal with fight or flight, with drawdowns, with whatever, and I don't freak out, is because over the years I've mitigated my risk, is because I've been through it before. I know how it feels. But at the same time, I also now know how to do better, right? So eventually I decided to spend time building my businesses. My husband went back to work and we were in a much, much better spot. I was able to regain my psychology. I was able to get back to my own confident self with positions and stuff. But I don't know why there is this thing in your head the moment you start having a bad month, especially if you're a newer trader. I mean, I wasn't that new at that time. I think it was like, I was already trading for like 8 years. So I wasn't new. And we were far from like, oh my God, we're strapped for cash. No, there was a lot of cash. But for some reason, that one losing day, and when you start realizing the amount of money, and then you're like, oh, if this continues, what do we do about the bills and that expensive holiday that we planned out and all the stupid stuff that we bought that we don't need? And then you only realize all of that when it hits you and you're like, okay, that is a lot of money. Shit. So yeah, don't go full time until you are 100% confident that your cash flow is sorted. There is no big timeline. You know, some people can get there faster because they're more financially secure. And unfortunately, I have to burst your bubble. The more money you have, the easier it is to make money. Money goes on money. Here's a big, again, unpopular belief. It's something to do with psychology, for sure. It's not to do with, with the fear of this or that. It's literally with the comfort that you feel knowing that your bills are sorted, and then you can just trade for the cherry on top. So what I do these days, we have pretty established businesses. Obviously, I have Topstep as well. I am a contractor. Anything that comes from trading goes towards trinkets, goes towards sofa, goes towards a new Sony TV, goes towards a new computer. I paid for this computer out of the Topstep payouts. So, it goes from the extra money that you make as a trader, you can then treat yourself. And of course, you can put it in savings. You can put it in, in your kids' college fund. You can put it away. Sure, that's a very good thing. I don't have kids. I have 8 dogs. We don't plan kids. I'm too old anyways. And even if I never wanted kids, I just, I like other people's kids, just not my own. So, yeah. And I love animals. I'm a huge supporter of animal charities. I'm obviously huge dog lover. I've got 8 of them. I enjoy that. I enjoy a pretty comfortable life, but nothing too crazy. I don't really do. We used to do expensive holidays, vacations. We used to go splash a bit of money. And we used to take our 2 dogs with us. Now it's a bit more difficult because I would probably need to get like a motorhome and another car to get them over the over what is now a big Brexit line. But back when we were all a part of the EU, we could just travel with no restrictions with animals. It'll be more difficult now. So yeah. Do you not swing trade anymore? I'll be honest, I very rarely swing trade. It's not like never. But if I am going to do a swing trade, I will do via the options. I would not necessarily go, yeah, I'm going to put my entry here, then a humongously massive stop over here. Options allow me to control risk better. So I would not say that I'm a huge options trader. I do use options levels, and I have I'm Series 3 qualified, so I do have a very deep understanding of what they're used for and how they work. But no, I wouldn't do outright swing trading anymore if it's not in an options, as an options vehicle, if that makes sense. And there are multiple things that you can do. If you're in a range, you can sell options, for quite a good income, but you have to be sure that it's going to stay in range for a while and be ready to bail if it starts going wrong, because usually the short puts have an unlimited loss, which is troublesome. If you're in equities and then you're wrong and suddenly you're like, oh no, what's happening? So I do swing, just very, very rarely. Very rarely. What is initial balance? Can you show an example of that? It's just the first fancy name for the first hour of any currently active exchange. For now, it's London. For New York Stock Exchange, we have obviously equities, but then the COMEX and NYMEX actually start slightly differently depending on the product that you're trading. If you're going to get involved in like, let's say, platinum, copper, gold, they start an hour earlier than the New York Stock Exchange. So that is their initial balance. NYMEX starts half an hour earlier. And then there's, an hour just before the New York Stock Exchange opens. That's when NYMEX initial balance ends. So, yeah, we probably don't have time to go through all of that now. But, yeah. What are the 3 lines on your chart refer to on the platinum chart? Well, this is the monthly supply. You were obviously, I don't know where you were when I was doing this, but this is a big monthly supply. So it's actually a zone. That's one. And then this is COMEX value high, COMEX value low. But this is where this whole move came from, 1240. But when I drop down to a 30-minute chart, you still have it there as a line, but it's enough to delineate that, hey, we've got a supply coming. So then if I see some selling here over the next week or so, even a month, then I'll know what they're trying to do with that particular supply. Are they rejecting again? Are we reclaiming it? Are we going further, completely ignoring it, or are we actually bleeding below it, reversing, and moving away to the downside? So it helps me with situational awareness. Right. Of course, I have dog hair all over me. Of course you do. I'm in a long, Prime says I'm in a long from 21,804. How dumb am I? Don't say that. Don't say that. So you see in NQ, if we are talking NQ, are we talking NQ? Yeah, so TraderX says I'm a full-time trader, 37 years trading. Yeah, you're not the same as the person who's asking, who probably has like 2 to 3 years barely. If you came from the pits, which I doubt that, am pretty sure that you did if you've been trading for 37 years. That's a different ball game. You have a lot of experience. It is not the same as these kids now coming in and they're just like, I've been trading since October. When do I go full time? I'm like, how to ruin your life 101. But if you come from that industry, you're much closer to people like Hogue and Eddie and Meat and a whole bunch of people who have been in the industry, lived and breathed in this thing, and you're probably better able to navigate yourself, your emotions, and the transition. You've obviously transitioned successfully from the pits into electronic screen trading, so that is a huge achievement. And yeah, Federico, Brexit was a bad deal for the UK. I was a Remainer, so I agree. Yeah. Where do you trade your options on? Tasty Trade. Lutnick said trade talks are going well. Second day has begun. Yeah. Thanks. It's like these, we want to hear, and then they come out with, yesterday they came out with, yes, it's going well, but it's still very difficult, and then everything rolled from the core resistance gamma wall. Yeah, that long that you mentioned, Prime, I don't think is that stupid, because we do have a put support actually in NASDAQ. Oh, do we have a put support? Hold on, let me just try and update that. See, I don't, the NQ levels I'm not. I do not update them often enough. Okay, so if we reclaim the put support at 21,800, let's say, the long is not a bad idea. I would be kind of thinking that we move away from the gamma walls, then we long back towards it. Move away from the gamma wall, go back towards it. Gamma wall in NQ options, not converted from QQQs or anything like that, just like literally outright 0DT options. It's actually at 948, 940, let's say 950, just for ease of use. So I don't think that's a bad idea at all, if that's your poison. So, yeah. Okay. All right, we have 1 more minute, so let's just see. If I can answer maybe one more chat. Alexander says, how about half an hour a day preparation for your trading, set to trade, and go hiking with the dogs the rest of the day, D? I am physically not able to do that at the moment, but yes, I would love to if my health ever allows. Right now, I can only handle 1 hour walk 4 times a week. That's it. Prime says, I was lower, but I got nervous. Don't get nervous. It's like, are you sized up so much, like to your eyeballs, that if you lose this one, it's the end of the world, the end of the XFA or Combine? Yeah. So, just control your risk, and you'll be all right. Okay, I think we're going to finish it here. Like I said, I'm probably going to wait until, in fact, I have to wait because I've locked up my live until 4 p.m. my time, which is half an hour before the Euro close. So we're going to see whether we can find a trade or two. And if not, that's fine. I will see you for lunchbox trading. I'm on with Anne-Marie today, so please join us for another women power, girl power discussion about strategies, levels, maybe pop in a trade into the end of the day as well. Other than that, thank you so much for being here with me. I hope you derived some some useful information here, some levels on various products here that I like to look at. And Prime, good luck with your long position. I do hope it works out for you. We do need to see a more committed close above that put support, and then you at least have some room to gamma exposure 1 at 21,900. Okay, that's it. Thank you again. This has been the Your Trade. I'm Marcus Tucker D. Enjoy the rest of your day. I will see you later. Take care.